Yeah, hi traders. Chris Wesson here, head of research at Pepperstone. Well, it's been a bit of a mixed session, to be honest, coming through in equity land, if we use that as a starting point. Tech's done really well. There's been a lot of focus on the Delta variant, and that's meant that the stay-at-home stocks have done quite well. Tech, with its defensive earning quality these days, has performed really, really well. Financials taken a back seat in the cash session, but we've seen aftermarket Goldman Sachs, Morgan Stanley, Bank of America, JP Morgan ratchet up their dividend pretty aggressively. The market's certainly not expecting that going into Q2 earnings, which start on the 14th of July. So banks aftermarket have done well. So they've done poorly in the cash session. Aftermarket done really well. So you'd expect banks to put in a good situation as we go into the cash session tonight. Are we going to see people looking to sell into them? Well, I continue to have my call that I think banks are going to outperform the market going forward, but a lot really depends on what's happened with the bond market. The bond market holds all the keys overnight. We've seen 10-year treasuries down 5 basis points across the curve, good buying, so yields are lower. If you look at it on an inflation-adjusted basis and have a look at real rates, 10-year real rates are down a couple of basis points. So it's been really, really good for the tech trade. It's been good for those low earners, effectively. The momentum stocks that people look at have done really well. It's been bad for banks, but that may change. We'll have to see as we go through the week. But this chart that I've got up, I think it's really interesting just to show sentiment on the ground at the moment. Have a look at the blue line. It's the momentum ETF. So these are the stocks which are generally in the ETF with solid momentum. And you can see that's pushing higher. The SPACs index up at the top working quite well. Again, another sort of proxy of what's happening in risk-taking. ARK Innovation, the poster child of all things risk, working incredibly well there. Cathie Wood has been talking there about pushing for a new ETF on crypto. We probably won't know much about that until November, but it's something we are watching. And then you've got the FANGS index looking to take a new all-time high. So if I use this as a sort of poster child of risk-taking, it does tell us there's something that the momentum is working really well in this market, that the value's taken a little bit of a back seat, and again, it's growth that's working quite well in the market. So a lot of that is really down to what's taking place in the bond market. So the first thing I'm going to look at is what's happening in bond yields. I know a lot of retail traders don't tend to look at bond yields so much, but they really are very, very important. And you can see here 10-year treasury is down 5 basis points at 148. We're coming back into these sort of low levels here. So if that continues to push lower, then you're going to see tech outperforming. It's going to keep the dollar underperforming, or continue to see the dollar fairly sanguine. We'll talk about the dollar in a minute, but you can see there's been a really nice bid coming through in these bonds, and effectively that's had big implications for growth stocks. That's what you want to be seeing. Okay, we got consumer confidence coming out in US trade tonight. The market's expecting that to push up a little bit higher. Is that going to have any impact on the bond market? And then by default, what's going to happen on effects? Not so sure. I think still we'll be looking for that big event as we go through the week, the ISM manufacturers, and then more significantly, the non-farm payrolls on Friday, where the market's looking for 700,000, the employment rate to drop to 5.6%. The range of economists' views is between 1 million and 400,000. I think there's probably some upside risk to that. But we'll have to watch the reaction there. If bond yields are going down, that's going to continue to keep the US dollar from rallying too much, and it's going to keep tech stocks working really well. So let's have a look at the charts that we were seeing. Okay, so you can see here the Nasdaq, bang, up it goes. New all-time highs. It's a momentum dream. It's just trending like an absolute textbook at the moment. Looks really good. I continue to stay long, as I do with the S&P. We've tried to make a new low. We tried to take out these lows. Bang, up it goes. The market's clearly got some buying pressure playing through. How much longer can this go? I think you'd probably be looking at getting the oscillators on there, looking for divergence as you signal for vulnerabilities. But right now, it really does look quite strong. Tech's leading this one. We'll see how financials trade as we go into that session ahead. Let's have a look at how that's impacted the dollar. Again, a bit of indecision. We're seeing this gradual creep up. If we blend this together using a 5-day exponential, you can see that the trend is starting to creep higher, but it's not really convincing at all. If we do see bond yields, both on a nominal and specifically on a real basis, moving higher, then I think the US dollar is going to work quite well. But the dollar index is just having this gradual creep at the moment. It's not really doing a huge amount. Let's have a look at dollar CAD. Again, this just looks like it wants to break out. One for the radar. If this really kicks up, then I would be going along with this one at the moment. But it looks like it's got this feel that it wants to push higher. If that does kick up, I'd be certainly going for the ride. Euro dollar, again, just a sign of what we've been seeing in the dollar index, a bit of indecision. Rallies are sold, pullbacks are bought. This needs to play out. And again, this is one that we've got very firmly on the radar. There's indecision there. And again, there's a big battle that's taking place that needs to be resolved. Have a look at Aussie dollar. Well, we traded higher again. The sellers have come straight back into this situation. So, there's a lot of supply coming into the Aussie dollar. We've made a lower high playing through. And again, it does just look like this wants to roll over, but there's really just not the emphasis from the sellers to push this one markedly lower back into these lows. But, it's really hard to create any kind of upside in this market. It feels like if we break through these through Monday's low, 75.53, then I think the conviction behind shorts will probably ratchet up a little bit as we go into the Chinese data midweek, as we go into the payrolls, something we are watching there as well. Okay, let's have a look at the commodity trade, because the crude market, as we go into the OPEC meeting later in the week, is something that's caused some angst. Have a look at this. We made a new high. The sellers have come straight back in. We've closed below the previous day's low, on Friday's low. So that's an outside day reversal that's been playing through. We've seen follow through here. So again, the bears have wrestled back control in the crude market. I know that was on the radar yesterday. It was on the spreadsheet. But as the new news comes out, people are expecting anywhere between 500,000 to 1 million barrels of oil to come back through. So if this kicks on, that could be quite an interesting setup to look at for some short-term positions, perhaps back into sort of maybe even as low into sort of 71, into this kind of region to play through. The gold market, very much a reflection of what we've been seeing in that dollar index, just continues to just trade sideways. This is one which we can put a Bollinger Band on. And, if the RSI is around 50, then you'd be looking at just mean reverting trade just until we can get some clarity from the dollar and see. But at the moment, there's no real move. It's just one that you're selling into rallies, buying on dips, and just to continue that one going forward. Let's have a look at crypto. Some mixed reactions playing through. Again, we've just got this upper band of the price pushing into the upper point of where it's recently been trading. Can this break up? I think if we do get this break of 35,240, then you'd be pushing up, as I talked about, into 38,000. So something we are watching pretty closely there. Clients are positioned that way. And again, Ethereum actually looks really nice. If you've got this downtrend that's been given way, got this strong move higher. I think this market has every capabilities of breaking into 22.31. I think that's going to be where we're potentially going to see a bit of supply going through in the short term. And also Link one is one that's been on the radar. And again, we're just pushing that downtrend. Can we get a break of that? And can we get a break of this horizontal resistance levels around 20? That could be one to put on the radar. But it's all about England, Germany now. Let's hope the boys take it home. Have a good